Hey everyone, and welcome back to Investing Guide. Raymond Thomas Dalio, born August 8, 1949, is an American billionaire hedge fund manager and philanthropist who has served as co-chief investment officer at Bridgewater Associates since 1985. Dalio and other financial experts predict that a post-coronavirus world looks like that of the Great Depression, requiring years of ingenuity on behalf of the government and individuals to foster recovery from inflation. Today, we're going to be talking about the top 5 proactive measures of Ray Dalio to survive upcoming inflation. Make sure you stay until number 1 as you don't want to miss what the best proactive measures to survive the upcoming inflation are. Number 5. Understand the 3 pressing problems. There are 3 problems that are coming together, so it's important to understand them all individually and how they collectively make a bigger problem. There is a money and credit cycle problem, a wealth and values gap problem, and an emerging great power challenging the existing dominant power problem. What's going on is an economic downturn together with a large wealth gap and the rising power of China challenging the existing power of the United States. It's a fact that there has been a weakening of the competitive advantages of the United States over the last couple of decades. For example, the United States lost a lot of the education advantage relative to other countries, our share of the world GDP is reduced, the wealth gap has increased, which has contributed to our political and social polarization. But we haven't lost all of our competitive advantages. For example, in innovation and technology, the United States is still the strongest, but China is coming on very strong and at existing rates will surpass the United States. Militarily, the US is stronger, but China also has come on a very strong way, and is probably stronger in the waters close to China that include Taiwan and other disputed areas. Finances of both countries are challenging, but the US more so. The US is also at the late stages of a debt cycle and money cycle in which we're producing a lot of debt and printing a lot of money. That's a problem. As a reserve currency status, the US dollar is still dominant, though it's being threatened by central bank printing of money and increasing the debt production problem. Number 4. Productivity and equal opportunity are most needed. If we could at least all agree that we must have these things, that would be great. What we have now is a situation in which we're fighting each other. We are not providing equal opportunity, and we are losing our productivity gains. One of the greatest problems is that everybody's fighting for their cause. When the causes people are fighting for are more important to them than the system that binds them together, the system is in jeopardy. This seems to now be happening. Everybody has their cause, and they're almost losing sight of the overall picture. Democracy depends on compromise. It's the notion of compromise and working together and being able to have a negotiation to get what the most people want, rather than to have one side beat the other. You really have to take the relative parties and make them all agree on what's going to be the best. The group has got to be bipartisan, which means they're knowledgeable, bringing together parties of opposing ideologies who are also knowledgeable, not just smart, but who are also on the ground, to come up with a plan together that all can support so we're productive, increasing the size of the pie and dividing it well. It would be great if whoever the president is could draw upon people from both parties and different perspectives. Number 3. Printing more money. According to Ray Dalio, printing more money is the most expedient, least well understood, and most common big way of restructuring debts. It's like playing Monopoly in a way where the banker can make more money and redistribute it to everyone when too many of the players are going broke and getting angry. The billionaire investor and founder of Bridgewater Associates said that printing money, when compared to the other tools that policymakers can use like austerity, debt defaults, and higher taxes, feels good rather than bad to most people. It's tough to identify any harmed parties that the wealth has taken away from to provide this financial wealth, and in most cases it causes assets to go up in the depreciating currency that people use to measure their wealth in, so that it appears that people are getting richer. Not all devaluations are good, however, and Dalio says it's important to be able to tell the difference between the beneficial and destructive ones, and how they ultimately affect how willing savers are to continuing holding wealth in a given reserve currency. Printing and devaluing money is the easiest way out of a debt crisis. While people tend to think that a currency is pretty much a permanent thing and believe that cash is the safest asset to hold, that is not true, because all currencies devalue and die, and when they do, cash and bonds, which are promises to receive currency, are devalued and wiped out. That is because printing a lot of currency and devaluing debt is the most expedient way of reducing or wiping out debt burdens. And when the debt burdens are sufficiently reduced or eliminated, the credit or debit expansion cycles can begin over again. Number 2. Austerity, spending less. Austerity is deflationary and doesn't last long because it's too painful. Debt defaults and restructurings are also deflationary and painful because the debts that are wiped out or reduced in value are someone's assets. As a result, defaults and restructurings are painful for both the debtor who goes broke and has their assets taken away, and for the creditor who loses the wealth arising from having to write down the debt. Transfers of money and credit from those who have more than what they need to those who have less than what they need, for example, raising taxes to redistribute wealth, is politically challenging but more tolerable than the first two ways, and is typically part of the resolution. In comparison to the others, printing money is the most expedient, least well understood, and most common big way of restructuring debts. In fact, it seems good rather than bad to most people because it helps to relieve debt squeezes. It's tough to identify any harmed parties that the wealth was taken away from to provide this financial wealth, though they are the holders of money and debt assets, and in most cases it causes assets to go up in the depreciating currency that people use to measure their wealth in, so that it appears that people are getting richer. Note that you don't hear anyone complaining about the money and credit creation. In fact, you hear cries for a lot more, with accusations that the government would be cheap and cruel if it didn't provide more. There isn't any acknowledgement that the government doesn't have this money that they are giving out, and the government is just us collectively rather than some rich entity, and that someone has to pay for all this. Now imagine what it would have been like if the government officials cut expenses to balance out their budgets and asked people to do the same, allowing lots of defaults and debt restructurings, or they sought to redistribute wealth from those who have more of it to those who have less of it through taxing and redistributing money. This money and credit producing path is much more acceptable. It's like playing Monopoly in a way where the banker can make more money and redistribute it to everyone when too many of the players are going broke and getting angry. You can understand why in the Old Testament they called the year that it's done as the year of the Jubilee. Number 1. A proactive strategy for investors to both protect a portfolio and take advantage of market opportunities. First, worry as much about the value of your money as you worry about the value of your investments. The printing of money and the debt should make you aware of that, and that's why financial asset prices have gone up, stocks, gold, because of the debt and money creation. Second, know how to diversify well. This includes diversification of countries, currencies, and assets, because wealth is not so much destroyed as it shifts. When something goes down, something else is going up, so you have to take a look at all these things on a relative basis. Diversify well and worry about the value of cash. Americans look at the value of everything in US dollars, but they don't look at the value of the dollar. You're in an environment where you have to be cautious about that, because the easiest way out for a government is to do what the US just did, which is to borrow and print a lot of money. They don't have to get it from anyone, because when they raise taxes, they have to get it from somebody, and that somebody squawks. The population doesn't pay much attention to the debt and printing of money. They all appreciate the giving of money. So you hear the population say, "I need more money," and get angry if they don't get it. So you've got to give them more money, and it's easier to not take it away from someone else. While you're here, go ahead and click on one of these two videos on your screen. See you there.